Hello friends, once again welcome back to the channel. So once again I'm here to do some analysis on VIX 100. All I should say is that don't stick these concepts to just a particular index, unless otherwise. But don't stick these concepts to a particular index. I would advise that if you come across something that I've explained in a particular video using a particular index, and then you find such similar conditions on another index, please use them. So even the information here would be necessary for someone who is trading forex, and stocks. There are just a few dynamics that you need to understand, but some of the differences, actually I'm going to react to some of your questions in this video. Someone was asking which trading session is the best for trading indices. Indices are not affected by trading sessions like the London session, the New York session, the Asian session. They are not. They are not. This is purely price action. Just know, if you're good at price action, you'll kill indices. They are purely price action. So it's a code that is generated by a computer, but it's purely price action. That's why sometimes you may not find perfect entries using let's say indicators, but I don't say that indicators do not help. So be careful when you're using certain indicators, but I would advise that you step up your game in price action, because it's if you do research, actually try to Google about these indices. It's purely price action. So once again, let me proceed. If you're new here, please watch my previous videos, and if you find this video helpful, please remember to subscribe. If you're here like for more than one time, please subscribe. I would advise. So I'm here on the daily chart. We are talking about VIX 100. As you can see, we have some targets to hit for those that have been here for some time, but we have these targets all for purposes of learning. We've had our targets like in this region to come down, but the market continues to go up. So as of yesterday, I told you it provided us with a perfect opportunity for us to know something about the market. To know something about the market. Now, the first point that I'm going to talk about, personally, most times when I approach let's say a setup or like any asset, let's say even in forex, I do my setup. So even you could be having your setup like having a bunch of indicators, and maybe you have like 10 indicators. Even you yourself become the 10th indicator. You have a lot of indicators. Personally, I would come and I do my setup without anything, by just drawing lines and important areas. So it is one thing to draw an important area, and it's another one for the market to move within your setup. So when you have a setup, you should have what we call confirmations. So to someone who is into indicators, I encourage you to use them, and it's fine to use them if you're finding success with them. The only challenge that personally I've used to find with using indicators is that I would consider them first. So personally, I would like to urge you to try it out considering them last. By that I mean, you do your setup, then use the indicators as confirmations, possibly. As confirmations. So now, even as to us who sometimes don't use indicators, we have this. Now we have predictions to come down. We got our signals on the daily. I got my signals on the daily according to the setup. Actually, every day here, some things like they keep missing just because on TradingView the analysis goes off the moment you turn off the browser. But on MT5 things stay there. You would be seeing the things that have been changing over time. But now, if at all you have your setup like this, that maybe you hope the market to be coming down. Yes, I'm still strongly bearish on VIX 100. I hope we are going to get confirmations to come down, but before we get them, we shall not come down. So let me quickly go on MT5 on MetaTrader 5, and then we quickly see this. So it is the same setup. This is VIX 100. So we are going to quickly go on H4. So this is where we are currently. Let me show you. This is the side where we are, you get, and we are carefully analyzing it, basing on what happened previously, you get. I told you, if I told you analyzing, you base on what happened previously, to see, to predict what will come in future. That's what constitutes a high probability setup, you get, a high probability setup, you get. So now, one thing that you should know, and I should emphasize it, is that in a market, these setups, the structures that are created, they are created by large institutions, you get. They are created by those institutions that have a lot of money to move the market, you get. So what does it mean? Much as they provide us with opportunities, they are a disgrace to many of the traders, you get. It's because they keep losing money, you get. So most of the things that I'm talking about, it's not that I'm the one who coined them or who developed them. No, it's after a careful study of the market, and I see how, let's say, these people move the market. Yes, there are structures that are created, but then they're the ones that are manipulated, you get. Regions like these ones, to someone who is careful enough, could have placed an entry here, and then as much as this one was happening for him, was profitable, and the market got clear as it was moving, you get. So that's it. So now we on the daily. I told you something that you should know, and it's really sometimes complex, is to do the top-down analysis or the order flow, you get. If you get a signal, for you to analyze and see where orders are how orders are going to flow on smaller time frames. So let's try going on H4, and then we see, you get. So let's quickly go on H4, and then we see where we are. So I told you something, much as we expected, as of yesterday, much as we expected that the market would touch here and then it comes down, you get. Yes, the market really came, and then it came down, but then we were expecting it, you get. We were expecting it to come, to hit this point, to break this structure here, actually to surpass this structure here, but we just moved almost somehow almost halfway, you get. And that's really normal. No one should lie to you. Not all traders, even if you're professional, much as you're profitable, it's not that you always hit your targets 100%, you get. But given that we're on higher time frames, if you had taken entries of this signal, you would be really, really profitable. For 4 hours, each candle representing 4 hours, really, you would have been profitable, you get. But one thing that you should know, much as you place a trade and then you're in profits, you should know something, that you need to be analyzing as the market moves, you get. You need to be analyzing as it moves to see whether there are possible changes that they are making, you get, because it's a business of making money by some people losing and some people gaining. That's the fact, you get. Then you see, you expected the market to be continuing down, and then all of a sudden it reverses back, you get. It reversed back, and then what did we see? We have this high, and then we got a higher high. Now there is a concept that I'm going to stress here, you get, that you should know, you get. Now we get a high and a higher high, we get a low and a lower low. Yesterday I explained this, and it's really, really beneficial. It's going to show us, we are going to learn something about it, that how the market, the trend continues, a trend continuation, and then we are going to also learn how the trend shifts, you get, because sometimes it may not be a continuation. We could be coming down, but then we see something like this, where we see the market creating, we having a high, and then we get a low, we get a higher high, and a higher low, you get. So when we see this kind of pattern, it provides us with an opportunity, you get. It provides us with an opportunity. What does it mean? We expect that this move, sometimes it's not easy to jump onto certain moves. Patience pays, you get. The market may go, actually we expect now the market to be going, and then it creates a new higher high, and then the next, our opportunity to enter, if at all it's on a smaller time frame, you would wait for a retracement back, a pullback to the neckline. I talked about the pullback to the neckline, and then you shoot up. But now I want us to use an example of what happened on VIX 75, whereby the market moved in such a manner, and then we are going to see how you should be careful with this. You get? So now we can see that the market here, it wasn't really so perfect the way it is on VIX 100, but then we can see that the market was trending down. We get a low, and then we failed to create a new lower low. You get? We got a double top here. You get? So after us seeing this, we see that the market shot up high. You get? The market shot up high. So what did it provide us? Given that we are in an area where we expect the market to be possibly reversing, you get? Possibly reversing, we would wait for the market to create to break this structure, then we see a higher high. You get? We get a higher high, and then let me zoom in a little bit further. So we can see that this is our high. We've gotten this high here. You get? But then we look at the manner in which the market comes down. What did we expect? I told you yesterday when on the VIX 75 video, we would expect a pullback here. You get? We would expect a pullback here to this line here, and then we take entries if really we are going to go up. But to check out what they gave us. You get? We didn't get a retest to the neckline, a pullback to the neckline. So we start getting red flags that the market may not be coming really for us to take entries here. And look at the way the market moved. It just collected liquidity, moving sideways. You get? It was moving sideways. So we start devaluating. Actually, we start ruling out our entries, our bullish entries, because we would expect something a bit similar to what happened on VIX 100 here. You get? Whereby the market creates a high, and then we get a new higher high, and then you can see the market steadily moved back down to the neckline, and then it shot up. But just look at the way the market moved, and then you look at the way it was popping back. Still we got this drop here, but we were not touching the neckline. You get? The neckline. Now you start seeing red flags here. They are gathering liquidity. So now this is what you should know, because they know that traders after us seeing this high, we expect to get a retest to the neckline. Now they don't touch it, and then the market moved, and then by the time they came, if you're patiently waiting for you to take entries here, there are high chances that you would lose. Why? Because they gave you indicators that really were not considering this neckline so much, but then for you're sticking to your theory that they're coming to take entries here, for you to take entries here. You get? So always be careful. You get? Always be careful. So let's get back here. So now there are those opportunities that are provided to us. Now always, how do you know that the market really is going to trend down? You get? The market is really going to trend down. Given that we're on a higher time frame, this is what we should wait for, unless otherwise. So what I was saying, how do you get to know? How do you really get to know that the market is going to proceed in a given direction? Some of the things that we look for, some of the things that possibly now we should wait for. Let's say on H4, the daily time frame, we see the market, let's say, moving, and then it breaks a certain structure. You get? Whenever we see a structure being broken, there is a sign that has been created. You get? So what does it mean? Let's say if the market really now moves down here, you get, to break this low here that it created, to break this structure here, it validates this to be another block. You get? This kind of to be another block. And then when we see this, even if we return here, actually now if there is a break of market structure here and the market shoots back to this level, we would just take entries. You get? Because this one would become another block. Now I used to talk about other blocks in some of my early videos. I believe now you can know this. You get? So it's possible that sometimes if there is another block created, it depends on how the other block has been created. You get? It depends on how the areas in which it has been created. You get? But one of the things that we can use, there are those moments when we see another block and then there is imbalance, because we break structure with an imbalance. We return here. Even if the market tries to shoot up, our target would be just below here, because there are those order blocks with imbalance, there are those order blocks without imbalance. Even if we return here, we just take entries to come just down, you get. So that's a simple trick. That's a very, very simple trick, that when we see that when we expect the market to be coming down, we should sometimes wait for a break of structure, you get. So sometimes if it's a break of structure and then we've broken through an area of resistance, for instance this one here, there is resistance here because as of yesterday, this setup I showed you, this line here is a very strong, this is a very strong area of resistance, you get. And then it's a strong area of, we got it as support also. What would we expect? We would expect the market, if at all there is a break of structure here, possibly the market, if at all there is no imbalance here, if at all there is no imbalance, we just get a retest to this resistance and then we drop, you get. So the resistance provides us with the opportunity, because we've broken structure here, you see, we've broken structure here, let's say, and then when there is an imbalance, we'd expect the market to come back to this level and then we sell. If there's no imbalance, then the market will just come most times to just retest this level of resistance that has been previously support, to retest it, and then we take entries to come down, you get. So that's a simple trick for us to know when the market is continuing the trend, and by that, if it's continuing the trend, these are just minor pullbacks, these are just pullbacks, you get. So at least now we know how the market, we know some of the approaches through which the market changes the trend, and then at least now I believe we know the approaches through which the market creates pullbacks, you get. Pullbacks, these ones, you get a high and then you get a pullback to the neckline. Now you see the same thing, we have this one becomes our neckline, you see. We get a new high and then the market comes back to the neckline, you get to see. I believe you're seeing this. I believe you're seeing that. So for more of this, I'm going to talk about it in mentorship. So if you're new here, this is like an advert, you get. This is like an advert. Many of you really requested for mentorship, and I'm really going to do mentorship. So I would advise, if you're finding challenges and you would really like to use my approach of trading, you can join me in mentorship. We are starting in August. It's optional. It's really optional for those ones that are interested. Otherwise, if you can't join, you can still watch my videos, you can still subscribe. It's also good, and I would encourage it, you get. I would encourage it. But then in mentorship, as of yesterday, I informed you that we are going to be mostly considering M15. I'm currently on M15. We are going to be considering looking at M15. I really want you guys to be focusing on these relatively smaller time frames that provide us with some quick opportunities to get in and to get out, and then hopefully we could be making some profit to get. Personally, I believe if we consider these smaller time frames, yes, they have quite a lot of challenges, but I believe bigger time frames are quite complex, as we are going to see in the next video of VIX 75. Right now I'm going to record a video on VIX 75, and I want to address some issues. So otherwise, you can just text me on Telegram. You're going to find some more information. I can give you more information about mentorship on Telegram. There's a link in the description. You can text me. Yeah, but the last thing that maybe I can talk about is the payment. I'm going to update you on the payment method, and then the mode, and then the platforms that we're going to use. But I would really much want you guys to suggest which platforms you're comfortable with, that you can access, that we can use for mentorship. But you can pay $150 if you're paying between July 1st to July 15th 2022 to July then beyond July 15th, that is July 16th to July 30th, you'll be paying $200. I believe it's really reasonable, and then I'm happy for those that really that most of you are like, it's really reasonable. I didn't want to just price it so high. I believe it's moderate for anyone, and I've given enough time for you guys, for those that are really interested, to look for that money. You get to look for that money. So otherwise, for now, I really wish you success in your trading. I really wish you the best. I want you to be profitable, even with this knowledge that I'm giving out. If you can really apply it well and then you're profitable, that's my happiness, you get. And I'm getting messages from many of you who are winning, and then I'm also getting messages from those of you who are losing. I'll be honest with you, but I'm happy for those that are winning, and I wish all of you to be on the winning side. For now, peace.